Boeing shares a little bit lower right now, down about 1%. The company reported results that were basically what they already told us, mostly in line with the pre-announcement earlier this month. Boeing lost $10.44 a share during the quarter on revenue of $17.84 billion. The company's new CEO, Kelly Ortberg, says the company needs to become leaner and improve quality. Later this morning, Boeing machinists will begin to vote on a new contract proposal that could end the 5-week-long strike. And joining us now, one of the analysts who will be on that call this morning, Ron Epstein, Bank of America's senior aerospace analyst. This Boeing shares, Ron, good to see you. Boeing shares already have bounced a little from the mid-140s, but they're pretty close to multi-year lows. If it's going to work, if they're settling the strike, if Kelly Ortberg, starts putting things in place for a turnaround, still might be at a point where you could buy it long term, or no?
Ultimately, if you're going to be an investor in Boeing, you have to think longer term. Kelly rightly pointed out in the release, it's going to take time to turn this around. He highlighted, important things that have to be addressed. One that we've talked about before on the show, culture, and then, what's going to happen there. I think everybody's wondering, I know I am, what's Kelly think Boeing's going to look like in 5 years? He said it's going to be a leaner company. What's that mean? Are they going to dispose of assets? What are they going to do? But to your question, at the levels today, if they can get, production back to where it should be or close to where it should be, if they can get their operating performance, maybe not to where it was pre-COVID, because one could argue they were over-earning, but better than where it is today. Could there be upside in the shares? Yeah, absolutely. But I think investors just have to be patient. I would expect if the strike ends today or in a couple of weeks, whenever it ends, that would be a positive catalyst for the shares. There's been a lot of talk and news about Boeing doing a capital raise. If they could get that behind them, I think a lot of investors have looked at that as a potential clearing event. So could you see a shorter-term trade on the shares to the upside? Yeah, sure, you absolutely could. But to get Boeing back to kind of the levels where it was, or even close to the levels where it was, pre-COVID, pre the MAX crisis, a lot has to change the company, right? There's issues in the commercial airplane business. There's issues in the defense business. Both sides of the company are losing money today. So a lot has to change.
As far as a business to be in, is there a better business than trying to satisfy the demand globally for airliners? If they could just figure it out, they had it figured out for a long time. Make them really well and really safe, and it's you don't want to do it quickly, but hit your numbers that all the carriers are expecting, so that they can satisfy the demand they're seeing from customers. But if you just get those things right, it seems like the future would be really bright, because how many? Sounds easy.
I agree.
But how many globally? How many new planes are we going to need in the next 5 years globally?
Yeah, so a lot, right? So think about it this way: globally, on a monthly basis, both Boeing and Airbus together could deliver 737, A320 class airplanes at 120 per month, and then wide-body airplanes, they both could deliver those at 15 to 20 per month. That's a lot of airplanes if you annualize that up month over month. And there's only 2 players today that do this. So you're 100% right. If Boeing can get back on the execution track and start delivering airplanes to their customers, have happy customers, have happy employees, get through this strike, there could be a pot of gold in the future. But there's a lot of work that has to be done to get there. But you're 100% right. They split a global market for airplanes that are demanded everywhere with one player in Europe. So they've got the sales. Now it's all about execution.
And it's not going to be, China is not going to hurt Boeing or Airbus. On the margin maybe, but these are the two leading.
I think you have to think about this, and this is very important. It is a big market, right? So if you go out 10 years from now and you think about the number of airplanes that could be delivered, is there room for a third player? Absolutely. Yeah. third player. Now, there's that
so
third
it's
player.
culture. You're right. Then it's culture, but they've done it before. Obviously, they've done it before. They've delivered a lot of planes that were very safe and very well made. So then you started with culture, and then we'll end with culture too. So they just got to get it together and just get back to the place where they were before. And you think Ortberg's the right guy? He's an engineer.
Yeah, I mean, if you think about his pedigree, he's an engineer. He came from a company that was very well liked and very well run. Rockwell Collins. He ran that company for a number of years. Collins had very happy employees, very happy customers. It was a well-respected company. So he comes from the right DNA. If he could turn Boeing into a Collins, that would be a home run. I mean, and I think that's what everybody's hoping for. Just the difficulty is it's a much bigger company with big problems and a balance sheet that's challenged. But if you could turn Boeing into a Collins or into half of a Collins, that would be fantastic, and it would be reflected in the shares for sure.
All right. So you got a price target?
Yeah, right now we're neutral on the shares. Our price target's 170, and it's early days. If we see evidence that things are changing, I mean, obviously we'd always potentially reevaluate that. Okay. But right now we're just being a little cautious because there's a lot going on.